I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you. Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Ed Mathews. Ed's a seasoned real estate investor and the founder of Clark Street Capital. He has over a decade of experience in the industry, and Ed has built an impressive portfolio of multifamily rental properties in Connecticut and the Southeast. So first, Ed, let me just say thank you so much. Thank you for taking the time out and coming to chat with me on a late Friday afternoon.
Yeah, my pleasure. Nice to see you. How are you?
Yeah, I'm good. And real excited to sort of dig into what you're doing, what your background is. So let's just start there. Let's start with tell the listeners your story, kind of how you where you came from, how you got into real estate, what what your journey's been like.
So born and bred in Connecticut. I'm a Northeast guy. I have started off career-wise. Well, I'm a dad and a father of two daughters and two puppy dogs. And I grew up career-wise in the technology field, working for mostly Silicon Valley-based companies, working here on the East Coast for about 24 years or so. And along the way, I realized that traveling 150 to 200 nights a year for my job was going to make it very difficult for me to have a significant impact in my daughters' lives. And it's really hard to have that impact when you're, at a Courtyard Marriott somewhere in the Midwest.
Yeah, sure.
So it's, so basically we started a side hustle. I'd love to tell you that there was a grand plan that, eventually our real estate portfolio will overcome my salary and I'm going to leave and I'm going to do it in 3 years and so on. It was nothing of the sort. I'm passionate about real estate for a lot of reasons, which I'm sure we'll get into today. And it just kind of happened. It was a side hustle that was fun. And then it became, a decent moneymaker. And then over time, it became something that we could rely on for our family's, our family monthly bills. And so when it started to get close to when our portfolio basically surpassed my salary, my wife and I sat down and said, "Are we ready to do this?" And okay, let's go. And that was 5 years ago, and haven't looked back. And it's funny. I get phone calls from former colleagues every once in a while, like, "Any chance you want to?" And I'm, no, thank you. I am unemployable now. You would not want me to be on your team because I'm too used to being an entrepreneur and doing what I want and having freedom. So, but it's been a great ride and not done yet. And so we're really focused on getting to a certain amount of holdings, and then we'll take a deep breath and figure out what we want to do next.
Nice. So a couple of things I want to ask you about, and one of them, we can start wherever you want, but your at least your bio, it says you invest in Connecticut in the Southeast. So
yeah,
very different markets. We're both from the Northeast. We're both from New England. Though I would love to own something in, up and around, I'm from Boston, so like up and around that area, I would love to have it in large part so I have a place to go when I go back and visit family and friends and stuff, and can Airbnb, whatever it is. But also I love the city, but it's just a different type of market, right? We're talking about in the Northeast versus where a lot of people, at least maybe the popular opinion is, oh, you got to invest in the landlord friendly states, and that's going to be the Southeast, Texas, that kind of thing. There's a big difference in terms of legislation, but maybe tell us about sort of your start, and then I know you said it was a side hustle, so kind of talk about that in the journey, and then to what you're doing now that it's a full-time job. But I'm also intrigued how that ties into what your portfolio looks like. Is it
are you mainly focused in Connecticut? Are you mainly focused in the Southeast? Is it pretty well split? Just again, just a bit of a more detail into what you're doing in your, in your real estate business.
Yeah, great question. So the majority of our portfolio is in New England. So it's in Connecticut and a little bit in Vermont. We are just moving our business down to the Carolinas, and so we've got a couple under contract, and we're just now starting to kind of plant our flag in the Raleigh area. And so the whole idea here is, and I tell people this, and they think I'm trying to be funny, but I'm really not. And we buy dilapidated, frankly, crappy apartment buildings from landlords who really aren't that good at their jobs. And our kind of vision here is to, first off, make them clean and safe, upgrade all the common areas, upgrade the units as they come open, but also, serve those residents, right? And, the fact is that a huge part of us taking over a property is repairing the relationship between the residents and, us as the property owners and managers. And so, one of the things that, I'm very focused on, and our team is very focused on, is whether most of our residents are good, hardworking people, right? They, crank a wrench for a living to fix your car. They pour your coffee at the local restaurant. They, probably check you out at Walmart or Target. And, most of our residents have multiple jobs, right? To kind of make ends meet. And so, but from a management perspective, we don't care, right? I mean, if you are a brain surgeon or a lawyer or someone who is an auto mechanic, you're going to get the exact same treatment. And so that's usually, in a lot of cases with the buildings we're taking over, that's a unique experience for them, because they don't really, they don't trust it, for one thing. And so there's a repair that has to happen in that relationship. And, one of the really cool things about our business is, and it's kind of one of the things that juices me up, is we are very focused on vacancy rate. And the reason being is that, the average in Connecticut is, it's probably somewhere in the ballpark of about 16 months. In other words, you're moving pretty much every year and a half or so. Our retention is actually, we pay attention to it every quarter, and we just snap the line, and it's just a hair over 3.5 years. And so the reason being is that when they call with a question, we call them back and we answer it if we don't pick up the phone. When something breaks, one of our guys is out there same day or first thing the next morning to check it out and fix it. And then a member of our team follows up and finds out if we fixed it to their satisfaction. And so when we take over a building, it's a very rapid change in terms of look and feel of the building, as well as service that's being provided. Hopefully day one they start to realize there's a new sheriff in town, and we actually are committed to making sure that the building is clean and safe, and we are creating a living environment, a living environment where they can be proud to raise their families and live. And we do that. I love the fact that I get to lay my head on the pillow every night and know that I'm doing well and doing right by these folks. The other part of it is we make more money doing it. And the reason being is that vacancies are really, really expensive. And, from having to, go through and upgrade a unit, to the fact that you have an empty apartment that isn't creating, or isn't driving revenue. And so when we avoid that, it makes our business more profitable. And so, that's a fundamental piece of this as well. But, the fact is that we pride ourselves on the fact that it's, we're doing very well by doing right by the folks that live in our buildings too.
Yeah, I mean, providing that resident experience, the positive resident experience is so important. And I think, frankly, probably often missed. What size apartments are we talking about? Are you doing, and like I said, we're both from the Northeast, and a lot of what's there is old 3 families, that kind of thing.
Correct.
A lot of the newer stuff, there's bigger apartment complexes and coming in, but it's like certainly a high percentage of sort of the rental product is that like 2-family, 3-family, maybe 4, but sort of vertically. But what are you focused on from a sort of size wise?
Yeah, so we're so it's changed over the years, right? The where I started, the first building I ever bought was a 4-family on Clark Street in East Hartford, which is why we called the company Clark Street. And the basically what we would do is we would buy a multi. I'd run out of money. We'd flip a couple houses, take that capital, and buy another multi, and run out of money, and do it again, and then rinse and repeat. And we did that for about 7, almost 8 years. And then when I went full time, we started to trade up. So we started taking opportunity to sell off those smaller units. And like you were saying, it's, 3s, 4s, and a couple of 5s and 6s, right?
Mm-hmm.
And, we're in the process, we've been in the process over the last 5 years to transition to kind of the next level property here in Connecticut, which is, usually that 10 to 25 unit. And so we've been, selling off the multis, 1031 exchanging into the as somebody coined the term, micro families, that 10 to 50 unit space where institutions tend to not play, and it's mostly mom and pops.
Right.
And, we've found a pretty good comfort zone in that space. That's where we live today.
And same in you said Raleigh. I think that you're sort of focused on down in the Carolinas.
Yeah. Everything we own is less than 50 units.
Yeah, it's it's becoming actually even more and more intriguing to me at this point, because some of the just the pricing on the very large multifamily seems to be not aligning with the returns that you're looking at with investors. And so some of that smaller multi has at least investigating has become more appealing, and again, and some of it's maybe nostalgic. It's what I grew up around, right? It's what I lived in as a kid, as a teenager.
Yeah,
like,
me too.
That's what we had, right? So it's just kind of an interesting you have to look at all sort of, whether it's different asset classes or different, they almost are different assets within multifamily, the smaller versus even the midsize, and then the large, very large,
absolutely,
multiple hundred units. Are you syndicating? How are you kind of funding these? I know you said before you went until you ran out of money and then kind of flipped some houses. Is that still the process? Like, are these all owned strictly by you? Are you involving investors? What's your plan there?
Yeah. So originally, you're right. This was coming out of our savings account, and turns out I don't have an infinite amount of wealth. So we had to, figure out, if only, right?
Yeah. Not yet.
So well, maybe someday. So as we started to go full time, and I left my job in Silicon Valley, all my colleagues and buddies in that world were like, "Hey, let us invest in you." And I said, "Yeah, hold off. Let me go break things, right? Because a side hustle and an actual business that you can invest in are two very different things." Yeah. And what I had, in February of 2018 was a side hustle. And so we needed to build a team. We needed to build, business systems and break stuff, and then learn how to fix it, and hopefully not do it again, right? And so I did that for a couple of years. We continued to flip houses, and continued to acquire, a little bit larger units or buildings. And then about a year ago, I finally turned to friends and family and said, "Okay, let's see how we can pool our resources and start to buy, a little bit larger properties." And so we started to do that. So we've from a joint venture perspective, I think there's probably 8 or 9 properties that we've worked with, friends, family, and some former colleagues. And then we syndicated our first building about 4 or 5 months ago. And so that is that one was acquired back in December. And the ones that we have under contract currently, we've got a couple in the Raleigh area, and we also have a large development. It'll be the biggest project we've ever done here in Connecticut. That's going to be upwards of 80 units. And so we're syndicating that as well.
Great. What do you think is, okay. I have like question after question kind of lining up
Fire
in my
away,
head.
man.
What do you feel, why Raleigh? Like what, if you were focused in that Connecticut area and Vermont,
Yeah.
why then Raleigh? Why did you just decide? I mean, I know, like I mentioned at the beginning, kind of the Southeast is one of those, it's the place that people talk about, that's where you're supposed to invest.
Right.
But why Raleigh specifically? What do you like about that market?
Yeah, so in Connecticut, the challenge here is that there aren't any big properties, right? I mean, the ones that are even more than 25 units are few and far between, and most of them have been owned by the same family for 35, 40 years, and it's now the grandchildren who are running it, and they have no intention of selling it. And so, one reason was they're just, in order to scale our business, we have to, we're forced to leave the state. The reason, so when we look at a geography, right, and we were looking in Kentucky, we were looking in Ohio, we were looking a little bit in Indiana, North Carolina, South Carolina, and what we look for is a handful of really specific things. I want, from a population perspective, I at least want it to be stable over the last 10 plus years. Growing is better. Growing above, or the average growth of the growth states in the Sun Belt is even better. And so, North Carolina is one of those places where it's kind of like someone took the map of the US and kind of tilted it towards Florida, and everybody's kind of rolling down the map into, somewhere below the Mason-Dixon line. And so, we look for some really basic stuff, but we get pretty deep into it too. So I'm looking for population stability or growth, looking for job growth, looking for job diversity. So I want to see, if the manufacturing plant in town shuts down, it only employs 8% of the people, and everybody else is going to be okay. And those 8% are going to find new jobs relatively quick anyway. So we're looking for, no one employer has more than 10% of the employee base sector, right? And so that's one thing. We're also looking at investor activity, right? Because at some point we're going to want to sell this, and I want to know that there's a vibrant community there. So we look at developments, construction starts, adoption or absorption rates of the apartments that are coming online. I'm looking for transactions. I want to see that the local area is active, and that buildings are trading. The other things we look at, obviously, and that's kind of a macro approach, right? And then when we get into the micro, well, actually, let me step back to the macro. So the other part of it is income, right? So I want to know that the income of the median income of an individual and the median income of a family can support the rents that we believe we can get within that market. And so, it's the standard 3X. So if you make $9,000, you can manage a $3,000 a month rent, and if you make $3,000 a month, you can only handle 1,000, right? And so we adhere to that very closely. We also pay attention to poverty rates, and so any areas that are at that 9.7%, which is the U.S. average, if it's below, we're interested. If it's above, we take a pretty hard look at why it's above, if and before we go to invest. And then on the local level, obviously we're paying attention to development within the series of neighborhoods we're looking at. We look at crime rates, obviously. We look at schools. We subscribe to the local paper. We review the city 10-year plans. We really want to know what's going on, if there's a convention center coming in, or if the mall down the street is struggling, or an employer is staffing up, or if an employer is being severely impacted by the recession that's allegedly coming. We want to know all of that, and so that's we move very slowly to buy, but once we do, we're like white on rice. But the fact is that we're not in a rush to jump into a deal until we understand comprehensively what's going on in the market.
Yeah, I mean, it makes sense, and thank you for sharing all of. I mean, those are all extremely important, especially if someone's considering it, sort of branching out to a new market, you may have a good handle on one, whether you're just starting, or you may have a good handle on one market, and now you're thinking about sort of adding to your portfolio. You really want to look at really all those things that you just mentioned before before you commit, before you purchase there. And I think that at least for me, from an experience standpoint, what I've realized is the micro is extremely important, sort of that the micro neighborhood or the markets within the market, right? Because you look at the city, but then there's obviously all different parts of each city, and so it's kind of being really aware of where you are, and you pointed to a few really good sources for the local paper, like people that have lived there a long time, just talking to them about it's like where would you live, where wouldn't you live, that kind of thing.
Right. It's amazing what you learn by going to the local diner and sitting at the counter and talking up the waiter or the waitress or the person working the register. It's amazing what you learn. The other thing I do is I'm a big guy. I'm 6'4" and I'm not small, right? So I'm imposing. So I can't walk up on people like walking through the neighborhood. So what I'll do is I'll drive up and I'll roll my window down and say, "Excuse me, do you have a minute?" And I wanted to know exactly what the question you were asking, which is, what's it like to live here?
Yeah.
Right.
Yep. And the other, I don't know that I would have thought of this on my own, but it sort of happened, is just if you're doing any sort of value add, and I guess if you're in a development space, talking to the contractors, because most of those contractors know contractors, property managers, like they know that, that market like the back of their hand, and they can say, I've had them talk to me about, don't be south of this street, don't be, east of this area, or like, I expect this area to be huge in 2 years or 3 years, like just based on what they've seen in growth in the market and stuff. So it is really getting granular with, kind of the people that are well versed in the local market and in it, like day to day in it. I love kind of what you pointed out there. As you moved into kind of the joint ventures and the syndication and stuff, how are you structuring all of this? What's, I guess, more to the point, what's your role? I know it started kind of side hustle, and then you talked about building a team. So maybe, what do you find is your kind of superpower in all of this? What do you like to have team members do? How do you work that?
Yeah. So I am, like, by personality type, I'm a problem solver. So typically the things that I have two basic roles here. One is acquisitions. So I'm the person who is working with, like, if we're working directly with a building owner, which is probably more than half of the deals we do. My job there is to kind of understand, okay, they're selling it for a reason, so they're struggling with something. So let me figure out what they're struggling with so I can solve that, right? And so, it's kind of, where are you in your journey and where are you trying to get? And okay, how can I help you get there, right? Some folks are looking to trade up, and I'm, a couple years behind them. So I'm looking to trade up into their building, and they're looking to trade up into something bigger. Those are more straightforward. But by and large, the reason that we're buying is that there is, there's a problem with the tenant relationship. There's a problem with, a tax situation, or, that they don't have enough money to keep up with the maintenance, or there's a CapEx expense coming down the pike that they don't know how to, they don't have the ability to pay for. And so, part of what we're trying to do is kind of understand, where are you and where are you trying to get? How come, right? Why are you selling? So that's, we have a team of virtual assistants. So I have 7 people that work in the Philippines, and they do various things, and we can get into what they do. And one of them is an acquisitions person who is, we target very specifically. Like, there are in Connecticut, there are, I think, 1,208 buildings that someday we'd like to own, right? And so on a, from a marketing perspective, we touch them once a month in some way, shape, or form. Whether it's a phone call from me or Rona, our acquisitions person, or it's a direct mailer, or if we have their email address or cell phone, we'll reach out to them directly. And so, on a constant basis, Rona is filling my calendar with building owners who would like to talk about, tell me what what you'd be willing to offer. And, most of them, I'd say more than half of them are, well, if you pay me $1 million more than the building's worth, I'll sell it to you. And,
Right. Right.
Okay, well, I'll
Right.
call you in 10 years when
Yeah.
it's worth that.
Yeah, exactly.
Um, the other part of it is I'm raising capital, and same process, right? Understand kind of where you are in your financial journey and where you're trying to get, and do we have projects and offerings that will fit to help you kind of take the next few steps along that journey, right? So it's the same thing.
Yeah. I like how you said that, you're a problem solver, because I think that's really at the, sort of center of it all. As a business owner, a CEO, like someone kind of at the top, you're a conductor. You're a, you're the person that sort of just putting the pieces in the right place and solving those problems. And sometimes I think it's almost about problem avoidance or trying to anticipate problems and being out and ahead of them if you possibly can. But yeah, in the terms of these sellers or in terms of the investors, what you're trying to solve their pain points. So I love how you put that. You brought something up about, sort of building the team of VAs and sort of putting that into place. And I, as I said before we started recording, part of what I love about this podcast is I can ask you the questions that are relevant to me, but I am literally in the process of starting to like build a VA team. And so I'd love to kind of see what a lot of people talk about it. They're like, oh, definitely leverage VAs. This is, you can do. Yeah. And then, the flip side, or, what people argue is it's like their English isn't good or whatever, whatever, all of what I think are probably limiting beliefs and fear of hiring people. But tell me about your experience with it. Tell me kind of, the process that you've taken and what sorts of things they're doing for you would be great.
Sure. So we started with my executive assistant, so to speak. Excuse me. So Janice came aboard just about 4 years ago, a little bit more than 4 years ago. And so it was just me and her at that point. And, we basically, based on the business plan that I created, we started to create, what does the org chart look like 6 months from now, 12 months from now, 24 months from now, and so on. And then we started building out job descriptions. So I'm a technology guy, right? So I think in terms of systems and processes. And so one of the huge things that I committed to, and then me and Janice committed to, was running this business as if it were a $10 million business now, even though it was nowhere near that. Yeah. And it still isn't, by the way, full disclosure. But the fact is that, we wanted to have the processes in place so that we could scale when we were ready. And so, I knew pretty much, within the first month of going full time, kind of how the next few years were going to play out. And, then COVID hit and that changed the game a bit, but, but, nevertheless, I had a ton of success with bringing Janice on. So she does a lot, right? Initially she was handling correspondence. And at that point we had a property manager that we had hired. So she was helping me keeping tabs on the PM. She was doing our social media for us. Like I would write it and then she would post it. And then she and I would take turns engaging. She helped with direct mail. So I would give her a database and say, okay, I need, these 400 properties need to get, these series of 7 letters and postcards over the next 6 months. So we would, she would handle all that for me. One of the huge things that she did that, I knew was a weakness of mine is consistency. Right. And so, like with marketing, with dealing with, working with brokers or working with, building owners or investors for that matter, consistency, continual touches, right? The law of 7 touches, and it's going to take me 7 times to be in front of you in some way, shape, or form, whether it's a logo or you see me talk somewhere, or you listen to a podcast I appear on, or you get a letter from us or whatever. It's going to take 7 times to recognize that this face and this logo solve these set of problems and delivers this kind of value to you as a whatever you do, right? And so having that person own that, so that I could run around like a crazy man and buy buildings and work with my contractors to fix them and do all the other things that I was doing. She was predictably and very consistently reaching out to all the people we needed to reach out to. And then as we grew, I brought on, I brought on a social media manager.
Mhm.
And so he is now responsible for all of the channels that we, from Facebook to YouTube to Twitter and LinkedIn. He's responsible for making sure that everything, I'm still writing 95% of the stuff that's going out, but Jazz, who's the gentleman who runs it, his job is to make sure that everything, the trains run on time, so to speak.
Yeah.
Then we brought on an acquisition person so that I could kind of take one step back from dialing for dollars. That would free me up to really focus on, in that case, it was mostly building owners. So I was, buying. I tell people all the time, and it's true today, I'm a cheap date, right? So, if you're willing to give me 20 minutes, I'll buy the coffee and I'll tell you everything I know. I'll answer every question you have, and I'll tell you everything I know about the subject that you want to talk about, real estate, how to manage properties, whatever, right? And so, a lot of my days was talking to property owners, and either helping them figure out how to run their property more efficiently, which was my way of giving back, and knowing that someday they're going to want to sell, and hopefully they remember that I'm my intentions were pure, and that I do want to, and that I was able to help them, hopefully, and maybe they give me an opportunity to buy their building, right? So it's a lot of relationship building.
Right.
After that, so that's when Rona joined the team, and she started dialing for dollars, and now she handles all of our transaction coordination as well, which is a big job, and I have a feeling we're going to have to split that job probably in the next 6 to 12 months because it's a lot. And then we decided to take in property management. So I hired a property manager, and her job was to, help build that relationship with the residents. So, we use a technology called Hemlane that is our property management tool and a platform. And so Hemlane's a little bit unique. Appfolio does this too. Hemlane has a tier 1 help desk. In other words, if a resident has a problem, they can get online and chat with someone 24/7, or they can pick up the phone and call them. And their job at Hemlane is to kind of triage whatever's going on, right? Blood, flood, or fire, an emergency, I get a phone call immediately. Everything else is, the goal is to try and solve it on the phone, and then have a member of our maintenance team, and I can talk about that in a minute, go out and diagnose what's going on and get it fixed. Then we brought on a web person, and his job is to handle. We use a technology called ClickFunnels to manage for our website, and so his job is to maintain that website, build landing pages for lead magnets that we're putting out there, marketing pieces that we're putting out there, as well as do search engine optimization. And then we have an investor relations person as well, and so. Basically what we did is I hired Janice. Now she lives in the Philippines. She works my hours, so she lives about 8,000 miles away from where I am. Her English is as good or better than mine. I think that she is highly educated. She is honest as the day is long. She's as hardworking as anybody I've ever met. She's really, really smart. And I know that because I've thrown so many things at her. Hey, do you think you can do this? And her answer is almost always yes. And I get back a product that is better than I would have done. So, she's really helped me personally scale. And then the next challenge was, okay, we need to go hire and fill out the org chart that you and I built. I want you to do it. And so she would go out and find, she uses a lot of in the Philippines, there are a lot of Facebook groups for virtual assistants. And, we had the job descriptions created. So she would publish the job description and she'd get, I don't know, 40, 50 resumes. and inquiries, and then she'd sift through them, and I'd meet three of them, a few days later, and I'd pick one. And by and large, we picked rock stars. And I don't attribute that to my interviewing skills. I attribute that to her vetting skills, because the three people that I was meeting on a regular basis, I could have hired any of them and they would have been successful. Right. So it came down to kind of cultural fit and, whether or not they were, they were experienced enough and a good fit for what we were looking to do. So we've grown to, I think it's 7 virtual assistants and me right now. And then, locally, we keep it super simple, right? There's a handyman that we've known and trusted for years that handles every single one of the, individually the property. So there's handymen all over the place that their job is to triage and fix what they can. And then we have relationships with plumbers, electricians, HVAC folks, landscaping folks that get called in as needed. So a lot of moving parts. But technically I'm the only employee of the company. So
it's frankly very encouraging for me to hear that, because it's sort of what I have in my head as far as the structure. And I have an executive assistant. I don't call her a VA, though she's in Atlanta and I'm here in LA. So I guess technically, but she's someone I already knew. So it's it is what it is in terms of whatever the proper term is for it. But that my
right hand.
Yeah, exactly. Like someone that, like, literally, like you said, you just kind of like, can you do this? And then she makes it happen, and it's fantastic. And I do see her being, kind of the person that handles hiring these other VAs to add to the team. I really do think, because it's like, I'm just keep kind of adding more to her plate and seeing how she, it's like, tell me when that's too much, and then we'll figure it out. And it's like, she hasn't really said that yet, but I think we're getting there. And so the people that you brought on and sort of the order that you brought on, I feel like makes sense. It's kind of how I feel like it sort of needs to go in terms of, as you grow the business. So thank you for laying that out.
Sure.
Ed, I'm going to switch gears and ask you the questions that I get to ask every guest, because as much as I am enjoying this conversation, I'm sure you would like to have your Friday night. So I will go ahead and we'll start with the first one is always based on the name of the show, but what is your why? What drives you, to be so successful?
So it's a little bit personal, if you don't mind me sharing.
Of course.
So there's a genetic fact in my family, and that is that my wife's family tends to live into their very late 90s and early 100s, like all the women in the family. In fact, my father-in-law used to joke that the women in the family don't know enough to lay down, right? I mean, they live forever. Okay. And, my folks don't, right? My folks tend to pass on in their mid to late 80s. And so, that tells, and my wife is very healthy and in great shape. And, she's going to be the one that lives to be 150. Right. And so, one of the things, and knock on wood, I hope so. Yeah. So knowing that is that, comes the reality that there's 15 or 20 years she's going to be here without me. And I need to know when I lay my head down for that last time that she's okay. And for a bunch of reasons, right? 2 predominant ones are, 3. 1, she's my person, and I want to make sure that she's good, right? And that she's well cared for and all that. So real estate provides that cash flow over the course of time. So I'm in my early 50s, I'm 53. So, I've got about 30, 35 years to go. And so, the job here is to acquire enough real estate that cash flows that supports her no matter what she needs, right? Whether that's assisted living or, more advanced care or whatever. I want to make sure that she's good and that she's well cared for. The other reason I want to do it is because if I didn't do it, it falls on my kids. And, my girls don't necessarily, my oldest is a criminal justice major. And so she could either be a FBI profiler or a state trooper or, maybe a social worker. And none of those jobs pay particularly well. So she's not going to have, gobs of money. And my youngest, who's 15, told me a couple of months ago that she's really thinking about being a physical therapist for, sports teams. And I don't know how that pays. I have no idea if that's, a business to build wealth on, but I'm going to assume it's not. And so, I want them to have, to be able to live their lives and not have to have the financial pressure of taking care of their mom because their dad didn't do what he needed to do. So that is my why. Gets me up every morning.
That's very well stated, and thank you for sort of sharing the personal. A lot of people answer that with some level of family, and it's the same for me, right? But the things that you said and the reality of, kind of, I'm older than my wife. I expect, well, I don't think we have familial differences, but I'm like, I expect I don't even know. I don't know who's going to be gone first, but I'm not going to take any chances that if it's me, that she and the kids are not good to go. So it's kind of like, that is exactly, same thing. Like, that's how I look at this, is what do I need to put in place to make it so that it's hopefully I assume they'll have some level of emotional hardship if I'm gone, but like, there shouldn't be any financial hardship is really kind of what it comes down to. And I've even,
that should be the easy part.
Right. And I've gone as far as we have, I think a lot of people have life insurance policies, but I'm like, if I die, these are the people you talk to, and take this life insurance policy, get it invested passively, and that'll take care of you, like, regardless of even what we have, from our own portfolio. But just I very much resonate with the idea of just, kind of, how am I setting things up for when I'm gone? And then, hopefully we all live to 150 and, continue to enjoy life, but we don't know. And so it's kind of like, there's way too many stories about, people getting sick or losing their job or whatever it is to leave that to chance. So I definitely appreciate you sharing that and sort of diving into that so deeply. On a lighter note, typically the next question is,
sorry, I went a little dark there.
No, not dark. No, I think it's valuable stuff to talk about. Like, people just don't, that's life. Like we are not going to live forever. And so if you get a little bit comfortable with the reality of mortality, you can use that as motivation. And I've heard other people really talk about it that way. Like Joe Fairless, you probably know who he is, but sort of a big multifamily guy. He has a death clock. It sounds very morbid, but it's at the same time, like, the reason is, like, if you are actually looking at the number of time, the exact amount of time that you expect to live, like, that's probably going to motivate you to, make some waves in the time that you have left. I forget, I think I saw something on social media very recently, and that someone said that they look at the rest of their life in months. And if you look at it in months, you don't have that many. Like, the number becomes a lot smaller. So it's kind of just like really that reality. So but anyway, second question is, tell us something about yourself that's maybe not common knowledge, a special skill, a hobby, something that you enjoy, just to let people know you a little bit better.
So I am a Villanova basketball fanatic. It's probably well known because when they're good, I'm really obnoxious about it. But the men's and women's, I am a basketball junkie, and there's, I was better at other sports. I really wish I was good at basketball so I could have actually done something with it, but talent is what it is. But I probably watch a couple hundred games a year. Just, whether it's watching Nova or, San Diego State and Wisconsin playing, at 10 o'clock at night, it doesn't much matter to me. If it's good ball, I'll watch it. And I'm a huge college basketball fan.
Okay. So college basketball, are you, do you follow the NBA at all, or is it, I feel like people are very specific sometimes. Yeah.
Yeah,
I mean,
it's
the
a different.
Celtics
I
are
mean, it's a
look real
different
good
form of
right now.
basketball, right? So
Yeah,
yeah,
yeah.
I'm a
It's a
Celtics
it's a
fan.
it's a very
Although,
different game.
it's so strange that I'm also a Knicks. I can't say fan. I can't get myself to say that, but I am a interested follower of the Knicks, given that two of the starters are Villanova guys, Brunson and Josh Hart. So
Yeah,
I've been affectionately referring to them as the Villanova Knicks, and
there you go.
so that's how I reconcile it in my caveman brain that it's okay to watch and root for them. So
Right, right.
but
Yeah, I
until they're in Boston and they're playing my guys, but
right.
that's a couple weeks from now,
Is
hopefully.
it? They're playing the Knicks, right? Like that's the next round, right? Is am I, or no, or it's
76ers, I
the
think.
Sixers. That's right. Yeah, you're
Yeah,
right.
which is not easy. So we'll see.
No, it's not. I don't think the East is easy at all. Funny, I should have worn I have a Jason Tatum jersey. I should have worn that for this had I known we were going to talk
Yeah,
basketball.
right on.
Awesome. So when people hear this and they want to reach out, what's the best way to get hold of you?
Yeah, so I'm very active on social media. So you can find me under Ed Mathews or Ed Mathews 4 on Twitter, Facebook, Instagram, LinkedIn. I'm on YouTube under Clark Street Capital, as well as Clark Street Capital has its own pages on LinkedIn, Twitter, Facebook, YouTube, and Instagram. The other thing you can do is reach out to me on our website at clarkstreet.com, clarkst.com. And if we're a small company, and like I said, I'm the only actual employee of the company. Everybody else is a contractor. So really good chance I'm going to see the any inquiries, and I'm happy. Like I said, I'm a cheap date. I'm happy to spend time with anybody who wants to ask questions or learn about our business, or learn about multifamily and real estate in general. I've been very fortunate to have some really good mentors, and they didn't want anything from me, and try as I might. And so the way I pay them back is I pay it forward. So I'm happy to do that too. The other thing is, if you don't mind, I'll plug my podcast, the Real Estate Underground. So we interview every week. We interview, real estate investors from all over the country and talk about their business. And it's not all multifamily. A lot of it is multifamily. But I talk to flippers and real estate developers and build to rent folks and self-storage folks and industrial investors, and so we try to get a whole bunch of different types of perspectives. And similar to what you and I were talking about before we started recording this, is that the cool part about having a podcast is that I get to talk with really smart people who are really accomplished, and quite frankly, the only reason they're talking to me is because I have a podcast. Because if I called their office, they probably wouldn't
Right.
return my call.
Right.
So it's pretty cool, right?
Yeah, it really is.
So yeah, it's a sneaky way to meet really, really interesting people.
Yeah. It took me a while to realize that. Like
Yeah,
it took me a while to realize that I could sort of leverage the podcast as a way to get some questions answered that like you start
right.
talking to these people that are just know so much. They're so experienced, so intelligent in whatever sort of their niche is. And it's like, then it's just, you get to have these conversations. Like, I mean, I feel I've learned a lot today just from you. It's just like every person, and I don't even care. I don't care if they're ahead of me, behind, ahead, whatever you want to call it. Like if they've been doing it longer, I've been doing it longer. I still feel like I learn things from, people
Without a doubt.
at all levels. It's so great. I mean, it's really, really the best part of having a podcast.
Yeah, man. I think we're all reading the same book in this industry, and some people are a few chapters ahead of me, and I may be a couple of chapters ahead of them, but everybody brings a skill set and a perspective to the table, so we can all learn from each other. It's a good thing.
Absolutely. All right, Ed, final question for you before I let you go.
Yeah.
What is a piece of advice you would give to someone who wants to get started in real estate? They hear you today and they're like, this guy sounds super cool. What can I do to follow in his footsteps?
So first and foremost, educate yourself. If you watch TV, you think that flipping's really easy. It's not. And it's really, it's really hard. And there's a process to it. So I'd say, first off, educate yourself. The most important piece of advice is start now, right? the best time to invest in real estate was 10 years ago. The next best time is right now. And, don't try to time the market. It's not possible. Simply cut the best deal you possibly can. If you're in the rental business, make sure it cash flows from day one. If you are in the flipping or development business, make sure that you are assuming the worst case scenarios and manage those. And then when the mushroom clouds don't happen occur on the horizon, you're pleasantly surprised and you make some money, right? But that is the advice I would give.
Yeah, I love it. Well, listen, thank you so much. This has been,
my pleasure.
been awesome. I really enjoyed this conversation. Thank you for taking the time out today.
Of course.
I definitely appreciate it. And to the folks listening, please, the way that we get great guests like Ed is with, more exposure, and that is through likes, ratings, and reviews, so that we can reach more and grow our audience. So thank you, Ed, for being here today, and thank you all for listening.
My pleasure, Jason.
I'd like to show you why knowing your why is the start of your journey. Without a strong why, it can be so difficult to reach your maximum potential. My name is Dr. Jason Ballara, and every week I meet with real estate investors and mindset specialists that are taking action in order to build a life according to their own terms. We will break down what drives successful people and allows them to achieve at such a high level. If you are a professional wanting to break through, or simply someone that wants to hear an inspiring story, the Know Your Why podcast is made for you.